Hello, everybody. This is Jake Stenziano, host of Jake and Gino Podcast, here with my co-host, the multi-family mentor, the coach, chef, father, six, the best-selling author, the G-Daddy, Gino BRRRR. Gene, how's it going?
Jake, I'm not doing as good as you are. You want to know why?
Because I'm wearing a purple shirt?
No, because you've got your kids outside playing with chalk. So you got the visual of children sitting outside in the sunlight, having fun while you're recording a podcast. It don't get any better than that as far as I'm concerned, brother.
Dude, they're protected right now from the indoctrination of the public school system. I'm doing my thing as a parent. I'm living my best life. Thank you very much. You're absolutely right.
Exactly.
Anyways, we have a very special guest today. Today's guest was able to retire from his W-2 just after 3 years. That's a good little sprint there. He is now a real estate investor in Hawaii using the BRRRR, but it's not burr. It's warm. I'm guessing there in Hawaii to create passive income. So without further ado, Daniel Kong, welcome to the show.
What's up, guys? Yeah, it's warm, definitely warm here, but it's also very early. So if I'm a little slow this morning, just to warn you guys, it's 4 a.m. But for you guys, I had to wake up early. So just
there's some dew out there on the leaves. He's saying, Gino.
4 a.m. Daniel, you know what? I had no idea you were getting up at 4 o'clock in the morning. So Jake, what he's saying is you better bring the pain today. You better get your A game if you're getting Daniel out of bed at 4 a.m. Just saying, brother.
He's living in paradise. He's the first person up. Everybody else is still partying from the night before. So good, kudos to you, Daniel.
You know, that's one of the things that, like, when sometimes I'll do some work in the States or like in like California, etc. And so when I wake up, I wake up like 12 p.m., right? Like in California. I'm like, wow, it's 9 a.m. in Hawaii. So I always feel like the one challenge of Hawaii is we're a laid back state, but we always feel like we're behind. Like so you guys are always up and running already, where we're just kind of getting started, or most of us are probably still in bed sleeping. So
yeah, I love that.
So let's hear the story, Daniel. Tell us about the journey into real estate, what the W-2 is like, and why you made that decision.
So yeah, in 2018, I was working as a software developer, doing software. Been doing it for like a long time, and then I read that magical book that everybody reads, Rich Dad Poor Dad.
That's why I wore the purple shirt today, because I knew this was coming.
Perfect timing. But I mean, the whole idea of passive income and where you could actually like get making income and not be working, that whole idea to me was foreign, because my whole life I went to school, I got a good job, got good grades, I did the typical thing. I didn't even know the world of real estate investing or passive income even existed. So that purple book like blew my mind, kind of opened my whole world, changed my whole worldview, what was possible. So from there, I just kind of deep dove into the world of podcasts, books, kind of really consumed myself for the next few years, just kind of hustling really hard on the side while we're going into my W-2. I got a little lucky through COVID. I got started using the BRRRR strategy. First started out of state in Indianapolis, and eventually started doing it here in Hawaii. Got very lucky in a few BRRRR deals here in Hawaii that really supercharged my cash flow.
What kind of deals though? Are we talking like single family homes? Are we talking apartments?
Single family homes, and so they're kind of like little mini multifamilies, but then they're single families as far as so they're
Now you're losing me. What's a mini multifamily? You got to explain this to me.
I like that.
It's like zoning, right? So in Hawaii, we really don't have duplexes or triplexes or quadplexes, or those are very rare. But we have these things called monster homes or ohana units, where it functions as a multifamily, like a small multi, but in actuality, it's zoned as a single family house. So just really about the zoning, but in actuality, it functions so you have multiple units that are rented out from a single house as a giant house, but in actuality, the zoning is actually a single family house.
So you're cutting up houses on the inside to make multiple units on the inside of a house. Is that the idea?
Kind of. I mean, the house I'm in is like a 10-bedroom, 5-bath, but it really functions. There's like a 3-2 section. There's a 3-1. There's a 2-1 and a 2-1.
Do they share the bathroom and the bed or the kitchen?
No, it's all separate entrances, separate everything. So they have their own living spaces. But for tax purposes, it's a single family house.
Gotcha. Okay. Many multifamilies, Gino. I learned something new every day on this thing.
And Daniel, in Hawaii, aren't they come out with a law that they want to have accessory dwelling units as well? So if you've got a single family home, they want to be able to have the ability to put, which is awesome. You have that 10-bedroom home. If you could put another couple of structures on there, that will absolutely supercharge your cash flow as well, correct?
Yeah, so we already have this thing called ADU, or a single accessory dwelling unit, but our governor just passed a new law that's going to allow 2 additional ones as opposed to just 1. And I think it's supposed to go into effect by the end of 2026. And so there's a mixed bag of things, right? Because there's for as investors, we love the extra cash flow, but then some of the neighbors like the infrastructure is there might not.
Where do the cars go?
That's the big thing is parking definitely is an issue in certain neighborhoods, and it's.
So get on your bike, right? It's going to be all bicycles.
I mean, that's the thought, right? So like, they're building
Utopia, baby. Here we come.
condos, like, no car and stuff, but definitely like parking will be an issue in some of these smaller neighborhoods.
So Daniel, the problem that I see is I can look at it from both perspectives. You've created a housing shortage in Hawaii. Everything's so damn expensive. You have multi-generational mortgages where people living there can't afford it. So let's try to create something. I love this accessory dwelling unit, and everyone says not in my backyard, but let's try to come up with a compromise. Maybe if there's an accessory dwelling unit, you have a separate garage or a driveway or something. I think this is so needed there, and it's the ability to be able to have another unit where you can pay for your property. So if I'm living in a home and my taxes, my insurance are excessive, that accessory dwelling unit will allow me to stay, and it will allow me to maybe have another family member there, or I'll be able to rent it out. Because everyone's always thinking about the greedy investor and the greedy landlord. This is phenomenal for anybody who wants to stay and live in Hawaii and be able to afford it. Listen, my mom in New York has an apartment underneath her home, which is 3,000 square feet. That apartment's $1,700 per month. That has allowed a 77-year-old woman to be able to stay in her home because that pays for her property taxes and part of her insurance. I think that is good public policy, to be honest with you. I don't know if you have any thoughts on that or if you want to push back on that.
I think it's really a lot of it's public perception, and it's like the whole thing about not in my backyard, where everybody wants like the lower housing, they want affordability, which it should provide for people, right? But they just don't want it on their
They
street.
want it in theory, right?
Everybody wants the good things as long as it doesn't affect me personally. So I think like that's how it is in as humans and in any kind of society where we want the greater good of like the greater whole as long as it doesn't affect me personally.
I have to ask you a couple of really important questions. And the first important question is, you said I got lucky. What do you mean by lucky? Was it lucky picking up the book? Was it lucky picking the Indianapolis market? Was it lucky taking action? Was the timing lucky? Because I don't see it as luck. I see it as hard work, and then things fall into place because you're really focusing on, I guess, an objective. You've got clarity in your life. Walk me through like that after picking up the book and going, holy crap, this Robert Kiyosaki, he's telling me, what, but he's not telling me how. He's telling me why, not how. What were the next steps after you read the book for, I guess, to become lucky?
Well, I mean, to start off, I think like I feel lucky to be alive. I feel lucky to be in America. There's so many things I feel like just are going for me. I mean, to be in Hawaii, there's so many things that I feel like just very lucky, having a good family, did a lot of things. But the luck part, I think, was the timing of it, because I got it started. And so it was kind of crazy because when I started investing in 2019, I was like, I missed the boat because all the houses in Indianapolis we were buying it for like $50,000, $60,000, $70,000 doing the BRRRR strategy there. But a few years ago, those same houses were going for like 20 or 30. And so these guys were like, those houses are too expensive. I bought them for 20 or 30, but you're buying them for 50 or 70. And I was like, I missed the boat because I'm too late. If I just started, let's say like 5 years ago, I would be winning in life. And then it's crazy because now when I look back 5 years ago, I'm like, I wish the houses were like that priced like today, right? Just because like the last few years have been seeing a crazy increase in appreciation like across the nation. But so a lot of it is perspective, but I think we got lucky during the COVID like area because like a lot of the deals where we are planning to have a certain like exit or ARV, then because of the COVID frenzy and the craziness and those lower interest rates, we got a lot higher than we expected. We got to refinance at a lot lower interest rates. Like it kind of supercharged our cash flow and like the equity that we could pull out in a lot of our deals.
So Daniel, I would say, and I'm going to speak for Jake on this because I think Jake will probably 100% agree with me, which he usually does. But I'm going to say we can go back to 2014 and 15 and say, I wish I had bought back then. The economy was different. Rates were different. Sentiment was different. There was not as much rampant inflation as there is now. So people are going, oh, I should have bought back. And you're going to be buying today. And 5 years from now, you're going to be saying the same thing. I wish I had bought in 2024 when everyone's heading for the exits. And Jake and I, during that run-up, we did miss on a couple of deals because we were sitting in the past going, oh, these things are selling for 70,000 a unit. I'm not going to pay 100,000 a unit. Well, that same asset is 150,000 a unit. So that's the perspective that I think everyone should have. This is a long-term game. And when I say long-term, it's not 10 years. You can look at a 5-year window, and if you have an upcycle from where you were from 5 years ago to where you are now, things massively can completely change. You have the 2017 Jobs Act, which supercharged. All of a sudden, you've got cost segregation. You're seeing money flowing into no one knew that, but that's what was going on. And I guarantee you right now, anybody listening to this, if you're waiting for the crash and waiting for prices to adjust, prices may adjust in the short term, but they will continue to go up in the long term because especially in Hawaii, there's not enough affordable housing. There are more people renting. The inflation that's going on. So if you're really thinking about investing in real estate, don't wait. Get into it now.
100% agree with you. And it just takes a little bit of, I think, retrospective thinking on that. So like I said, like at the time I was like, I missed the boat. That's because I was brand new to real estate investing. But now when I look back, I'm like, actually, today is just as good a time as then 5 years ago. If you look into 5 years in the future, and so just like, to your point, it's today is a great time to invest in real estate. Next year will be a great time to invest. The year after, it'll always be a great time as long as you like have the fundamentals and you do it the right way.
So I love this podcast because number one, you're crushing limiting beliefs. I can't get in. The market timing isn't good. All of a sudden you're buying through COVID. The second one I want you to address, you're not even on the mainland USA. You're not even in a market, near a market. Most people say, hey, I need to invest in my backyard. That's the only way that I can do it. Explain to me the thought process of having to invest outside your backyard, buying these assets, third-party property management. What did that look like for you?
I mean, so all goes back to limiting beliefs because in the beginning, I was like, I can't afford Hawaii because it's too expensive. So that was like one of my limiting beliefs, right? So like, hey, I can't go. I don't have money when I first started. Like, I didn't have I had like my 401k, and I like this. The crazy story is like I didn't have any money, but then I borrowed a bunch of lines of credit, personal lines of credit. You can go to any bank, take out like 15, 20, 25. So in one day, I went to like 5 different banks, took out like 5 different personal lines of credit, just have access to cash, borrowed against my 401k. So I had like maybe like 100 and something, 50 grand in access to money at that point in time to start my journey. And I was like, hey, you need money to do real estate, right? That was my thought process. And so I can't afford like $1 million house in Hawaii to do these birds, but I can afford it in Indianapolis. So I actually went out of state because of the limiting belief that I couldn't do it in my backyard.
I love that.
Reading the books, like the typical, just like the BRRRR strategy, the long distance real estate investing, the whole things on those. And I just like, hey, like it makes sense. A lot of the numbers in Indianapolis, like the cash flow, like the whole price of rent ratio, what they rent for versus what they buy for is a lot better in the Midwest versus in Hawaii or any like these the bigger states, right? So I just started out of state doing the BRRRR strategy because there's a limiting belief that I couldn't do it in my backyard. After I had some success, I was like, okay, this looks working pretty good. Let's try it in my backyard. Now that I have like a little bit more experience and a little more wisdom, a little more like I guess a track record to maybe borrow some more money. Then I started doing my backyard and then started to get some more success. And so it all kind of like it was like a snowball effect where you start with the small deals, like the $150,000 houses, moving slowly up. And then in the beginning, when I started Hawaii, I was like, I could only do like small condos because I was so scared. Like, so okay, let's do like the $300,000 or $400,000 like small condos. Eventually did like $1 million plus like deals. And then now we're trying to do like multi-million-dollar deals out of state. So it's just kind of like a slow progression on like my skill set, but also a big part of like my limiting beliefs that were holding me back.
Daniel, when you went to your family and said, yeah, I went to 5 banks, I got lines of credit, I blew up my 401k, my credit cards are maxed out. What was that conversation like? Did they think you were nuts?
Yeah, no, like my family was trying to talk me out of it because I had like no experience in real estate or investing at the time. So they're like, Daniel, like you're pretty nuts. Like you're going a little crazy. Like, so like this whole thing, honestly, investing, even my coworkers are like, dude, you're going to lose like all your money. Like you don't know what you're doing. Like you don't know anything about real estate. And so, but I was just like, okay, like I read all the books. I listened to all the podcasts. I'm like, it just makes sense. And so bought the first one, like, they're like, you're like, I don't know what's going to happen. The second one, they're like, okay, like you're going a little too fast over here. And then like the third, fourth, fifth, after a little bit of things, like, okay, what's going on? So it's funny. So in the beginning, everybody was like, don't do it. You're gonna lose your money. But now like, all my friends and family, they're investing with me, like, so and I'm trying to teach them how to do the same thing. So but you have to kind of go first and prove it, because whenever you're starting something new, it is scary, and there's probably a lot of people who do try it and don't know what they're doing, and they probably possibly can lose like a lot of money as well too.
Jake, that's a familiar story, isn't it? First, we're borrowing from our family, then they want to invest in our deals. It's such a, what do you, Gino? You can't invest. You've got 6 mouths to feed. Hey, Gino, I've got a couple $100,000. Can I invest in your deal? That changes real quick, folks. It's an interesting conversation to have, and all they're doing, ladies and gentlemen who are listening to this, all they're doing is your family's trying to protect you. They don't want you to lose money. So don't take it as if they're being negative. They're afraid like you are, and they're just trying to shelter you from you trying to make the biggest mistake in your life. But when you go out and you borrow from 5 lines of credit, you'll blow up your 401k. You are all locked in. You will not fail. You'll do whatever it takes to make that deal work. That's the difference between somebody tipping their toe in the water and actually taking that massive action. Now, when you're doing this and you have the job, how are you balancing the job and the real estate? And then the next question for me would be, when did you decide to leave the job? How did that look?
So balancing is like, I've kind of been like an all or nothing kind of guy, where like whatever I put my mind to, it consumes my life. So when I was working as a software developer, it was like 40 hours in software and then like 80 hours real estate investing. So just all day, every day, I'm just thinking about real estate investing. I'm just like it's consuming like when I'm in the car, I'm listening to real estate investing. When I'm at home, I'm reading a book. When I'm like at night, I'm on a Zoom call or whatever. I'm just like thinking and doing real estate like with every waking hour besides my job. And like I said, I got very lucky in Hawaii, where after like a bunch of deals with like out of state and in Hawaii, we're actually making more in our net rental income than I was making at my W-2, which was the plan. I was like, let's replace my income as a software developer with real estate like rental income, and then I can retire and reach financial freedom. So that was kind of like the goal.
All right, I'm calling a timeout now because I've been trying to jump in here for a while on this because you mentioned 401k a bunch.
Sorry, Jake.
No, hands up, Gino. Don't shoot. I think he's got a Daniel Defense shirt on, so you better be careful. So you were investing in a 401k. Did that ever pay you a monthly dividend?
So I didn't invest in my 401k. I borrowed from it.
Well, to get a 401k, you had to invest in it.
Well, yeah, I'm like one of my W-2.
Pre-real estate, yeah, like pre-real estate investing. You were investing in a 401k, correct?
Yeah, correct.
And did it ever pay you a monthly dividend?
No, it did not.
So what was the sort of feeling that you got and the mind shift when all of a sudden you were investing into a hard asset that you were in control of and it started paying you every month? Because it's a wild, sort of difference from investing in something that you hope will appreciate to something that may appreciate and also pay you every month. So what was the mindset shift that took place when you started to realize that?
I mean, it was a huge, huge mindset shift. When I first started, like I said, I had no experience, and being in Hawaii, I had like this limiting belief, like I was planning to never buy a house because of I was renting at the time. I was like, Hawaii is too expensive to own a house, because all my friends who bought houses, they're like living on ramen and like kind of barely scraping by because the mortgage takes such a big part of like your monthly income.
Yes.
So I was like, I don't want that lifestyle. Like I enjoy just going out to eat. I enjoy I probably spend way too much money. I'm not the best saver. But then, like, because of that,
well, you want a fulfilling life. You want to be able to do what you want to do and not be held back from things, right? There's nothing wrong with that.
Yeah. So my conclusion was I'll just never own a house. I don't want it's just too expensive. But then now when I started like buying these things, it's crazy because we bought like, let's say like 7 or 8 houses before I actually owned my primary, and it was just like to build like the cash flow and the passive income. But the big like eye-opening moment was when I read that book, Rich Dad Poor Dad. The fact that it was possible and it could be done. So like that was the thing, is like once I had the switch of, okay, this is actually possible, it's actually something that someone can do. Now that I believed it, now I was okay. Now just like make it happen. So that was kind of like the catalyst that sparked the whole thing of like real estate investing and passive income.
So here's the thing, right, guys? It's more work, but over time, real estate, in most instances will appreciate, stocks will appreciate. I just want my cake and I want to eat it too. I want it to pay me a dividend every month. And that's probably the thing I like most about real estate, is that cash on cash return, not to mention the tax benefits that come with it. And so look, I know there's people out there that argue all day. Look, if you're this, that, and the other thing, you should just be invested in stocks. And maybe that's true. I just, after being in both, I had a 401k and I've been a real estate investor. In my personal experience, it's not even close. It's
You
not
know,
even
it's
close.
funny. When I first started, like, so after you read Rich Dad Poor Dad, he does talk a little bit about real estate investing, but it's really like a mindset book about how you can reach like financial freedom. So my path being in software was like, I'm like really good on the computer. Let's try reach financial freedom through the stock market. So actually, my first kind of like instinct was like, let's do it through the
Was it
stock.
because it was all you knew, though? Yeah.
Yeah, I mean, yeah. So I was like, but I read a bunch of books, and I wasn't really trading in the stock market. Just my 401k was there, and like there's like Robinhood didn't exist at the time, or some other like whatever things. But I was like, let's do this through dividends and through the stock market. So I did all this research, listening to podcasts, listening to books, a lot of just like information and fact finding. At the end of like all my research, my conclusion came was that there's no way to reach financial freedom without luck in the stock market unless you have a lot of money to begin with. And then the only responsible way to invest in the stock market through all my personal research was that you have to be diversified in an index fund, which basically will pay you like an average like 7% like annualized over the course of like the funds. That's like the only like responsible way to do it. Of course, if you want to you can buy some penny stocks, you can get lucky here and there, but like high risk, high reward, lower risk, low reward. Versus real estate was you can do low risk, high reward, where if you put in the work, you can buy things penny on the dollar or things where you can put in sweat equity to actually gain the advantage. Versus like stocks is like there's only like a limited amount you can do with unless you want to like take like big risks.
It's interesting though, because in my experience, we're always attempting to buy for reasonable returns. We're looking for maybe an 8% cash on cash return within the first 12 to 24 months. But then life events happen, COVID, inflation, all this other stuff where you actually have these physical assets. And then it's consistency over time. I love how Warren Buffett in his book, he talked about the snowball effect.
Yeah.
Staying in real estate over a very long period of time with consistent investments that you think will yield an 8% cash on cash return will create an amazing life for you if you execute. And I think that's the real big takeaway that I'm seeing. And we were talking about it. We were on a show yesterday talking about, investing for 10 years and then 40 years. We always say think in decades because a lot can happen. Like in your case, 3 years changed your life. People give up too soon. It took Gino and I 2 years to actually get our first deal, about 18 months. And then, probably another year after that before we really started, kind of getting decent returns on it. It's a long game, guys.
100% agree with you. I think the challenging part of real estate is in the very beginning, it takes so long before you can actually get that first deal or that traction because there's such a big amount of foundational knowledge and resources and network that you have to build in order to get to the point where you can actually get the returns or like find the deals that you need to.
People don't have the staying power, and that's why the people that are in it, do really well over the long term because the rest of the people give up too quick, right?
100%. So if you can survive that first year or 2 year, then but you're actually working through that time, right? The thing is, you can't just be like in that first year or two and just be like twiddling your thumbs. You have to be putting in the work, and then you're not going to get any results. You put in more work, you're not going to get any results. You put in more work, you're not going to get any results, and then boom, once you get that first result, then the second and the third and the fourth will come very quickly because you're building that foundation of network, knowledge, and infrastructure that's needed in order to play in the real estate space.
Our exact experience, 2T. Well said.
Anybody listening to this that wants to get into it, we've got the mentorship. I mean, it's took us 18 months, Jake and myself, because we didn't have buy right, manage right, and finance right. We were doing it on our own. And when we figured it out and we launched the program, the community, I mean, our students have closed over 80,000 units. And it really is community. It's accountability. That's why Jake and I have been in through the long term because we've been held accountable to each other. But if you're out there and you're struggling and you're like, I don't know how to figure out this multifamily thing, it is a little different than single family homes. Just go to jakeandgino.com/apply and just, apply to work with our team. See how the community can help you out in building your multifamily, whether it's your first deal or it's your next deal. Now, Daniel, you're buying right, you're managing right, and you're financing right. What does that look like to you as far as like now buying these assets? Because you've gone through this whole progression of buying homes outside your market, and now you're buying homes inside your market. So what does that framework look like in your life?
First of all, just to piggyback on your mentorship and your coaching is when I first started investing, I was super anti-coaching because, well, number one, I had no money, so I was poor, right? So you're coming through like a poor mindset, like why would I pay someone like $100 when I can just find it for free on the internet? So like that was kind of like my mindset when I first started. Now it's crazy. Like I'm like super proponent of the coaching and mentorship. I actually pay like a coach like for like some one-on-one coaching like over $100,000 a year now. But it's crazy how much like the like how important or how fast like a mentorship or like a coaching program can supercharge your trajectory. And it's just a matter of like the same things you said, when there's a community, when there's accountability, and you have the resources to kind of like hold you to like in the same course. I think it's really powerful. So I think anybody who's looking to do some multifamily, I think you guys have like a great program. I hear like nothing but like positive reviews from like all like some talking with some of your students. And so I just want to reiterate that is if you're looking to get into multifamily or looking to get into real estate in general, that like joining a coaching program or like some kind of mentorship is like an invaluable way to get started, as long as you're going to put in the work. That's like the caveat to it. So
I love that. And Daniel, let me just share a quick story with you and the listeners. On our third deal, Jake and I are closing on a 136 unit deal. We are completely overwhelmed. We are over our skis, and I'm working with a mentor. And with this coach, every time I have a problem, I get on the phone. How do you underwrite this deal? Can you help me create a pitch book? Can I have a takeover doc? Can I have your due diligence? And I'm sending Jake over all these docs, and he thinks I'm the smartest guy on the planet. And meanwhile, all I'm doing is
they're asking for like a schedule of real estate owned. I never even heard of this. And Gino's like, "Oh, give me a minute." I'm like, "Dude, this guy really knows his shit."
And all it was I had a coach on speed dial, and I'm like, and Craig Haskell, unfortunately, he passed away a couple of years ago, Value Hound Academy. That's where I needed to start. And it was invaluable because every time I had a question, you pick up the phone. You just saved me $25,000. Up, you just saved me 50 grand. Up, you just got the loan from the bank. It was an invaluable experience where I was able to walk through the deal. And from there, that's really the reason why we created Jake and Gino, because I saw the power of it. I saw the power that if someone else can help me out get into this deal, and I need to reiterate what you said, there's a lot of hard work involved. Don't expect to join a program and go, okay, now I'm going to sit back and I ain't going to do anything. There's a lot of hard work that goes into it. But if you're able to put the work into it and you find a community and you find that accountability, man, it is like putting gasoline on the fire. Now,
that's the one thing is I see a lot of guys who join a program thinking that if I just click this button, my life will magically change and like without me putting in the work. But it is like a lot of work. You still have to put in the work. It's just going to give you some like guide rails and some like some accountability, and it's also like a lot more fun doing it with other people. I think real estate can be very lonely if you're like a solo wolf who's just kind of like doing your own thing and just trying to figure out yourself. But then if you have other guys who are alongside you, some guys like a little bit same level as you're grinding together. There's some guys ahead of you who are teaching you, and some guys coming up where you can like bring up at the same time. It's like the most fun way to do or live life in general, I think, is when you're surrounded by community of people who are moving in the same direction.
Well, guys, I want to piggyback on that because in each part of the market cycle, we find that there's different strategies that we may use. We may use seller financing in a down market. We may use syndication and what we saw like when the rates were low and the money was flying around. So there's different strategies that you'll use throughout the market, and you may have blind spots to a specific strategy. And so if you can have someone shine a light on that, it's going to go a lot further. And selfishly, that's people may not believe this. The biggest benefit I get from our community is I'm constantly learning. I'm on podcasts every week. We teach classes. We have experts come in. Every week, I'm picking up one or two nuggets from the community selfishly that's actually growing our portfolio and our real estate. So for us, it's like we're kind of double dipping here, right? But it's an amazing thing. So we'll take it, right?
Yeah, I love that.
Love it.
So Daniel, the buy right, the manage right, and the finance right, what does that look like for you now?
So, I mean, when I first started, it was like single family houses using the BRRRR strategy. Like you're trying to buy at a discount, you're trying to like renovate and like keep the construction costs to a minimum. And then like with maximizing the ARV and the refinancing out into as low a term as you can. Over time, like Hawaii, like I mentioned is not the greatest cash flow state for the price to rent ratios, etc. So after doing into like going into after I retired, like the with my from my passive income, I still had a lot of like traction in Hawaii. And I was like, do I want to just sit on the beach and drink mai tais and just like live my life like that? But and it probably took like a 1 week where I was like, I can't just retire. Like there's so much more for life that I want to accomplish and that I want to do. Like I'm just like I would be bored out of my mind if I was to just quote unquote like retire and quit, you know. So like, okay, like real estate has like the momentum. I'm building the skill set here. Let's keep this rolling. And what that looked like for me was flipping houses in Hawaii. So as opposed to trying to use the BRRRR strategy or find only BRRRRs, now like my targets turned into like let's generate active income, some cash flow. So now we're like we have like we're doing some ground up construction, some fix and flipping in Hawaii, and we're buying out of state commercial deals and a little bit of multifamily in order to get some cash flow out of state and also for some tax savings. So that's what
Dude,
it's.
I love that. You have multiple we call conveyor belts. You have one that's producing active income that's really keeping you busy, and you have this other bucket here where you're creating passive income and creating generational or legacy wealth. You're getting the money from this bucket going into that bucket, and you're actually able to create wealth. That is awesome. Jake, what do you think? I can see the wheels turning there. You must be like, I like that strategy, brother, huh?
Well, he's in multiple places, got multiple streams of revenue. We wrote the book on it, The Honeybee. So I think it's one of the great things about real estate is there's businesses within businesses, and maybe you sprinkle in a little laundry income in there, right? You never know if you have time, and maybe some garage, storage income as well. So it comes from all places, right?
Yeah. And Daniel, like before we go to the short answers, as far as partnering and scaling up, what have you seen that to help you? I mean, do you have partners in your business? How are you selecting partners in your business?
We have like a one offs. We'll partner with like a one guy here or there on a deal, and to and the thing I find out is like there's some guys who are like amazing partners, some guys who are not so great partners, you know. And so like the ones that are great partners, you want to partner more with them. The ones that are not so great partners, then it's a one and done deal. But it's kind of like it's like a deal by deal basis. We haven't had any like long term partners, but we do. I did have like after having like some success and had some traction started to like hire employees. So we have like a small team now where we have like a crew of just like guys who are helping us with like both the flipping, the out of state commercial, and a few like and a ground up construction. So just like a slow progression of sometimes partnerships make sense, sometimes it makes sense to just like hire an employee.
Jake, before we go to the short answers, one more question. What makes the good partner? You said some good and some not so good. The ones that didn't work out, what were the issues with those that didn't work out?
I think it just goes the same thing with like a marriage where if you both go in trying to add like more value than you receive. So like I think like the rule is like try and give 70% and receive 30%. And I notice the guys who are whenever there's a partner who's like trying to outgive me, it makes me want to outgive them more. And so like it's like but there's other partners who are like they try to give the least amount or do the least amount of work and take the most. It makes me I mean like so like a lot of times like most of the time it's like we're doing all the work and then we're still splitting and everything like more than equal. And for that, I think it just leaves a sour taste in your mouth. Versus like when the people who are trying to outgive and like do more, they're like you just want to outgive and do more for them. And it's just kind of like this circle of either going upwards a lot or going downwards. Like so, it's just like the amount that they're give value versus like with the what they give back in return. I think was like
I love that. Thank you.
All right, guys, let's take a quick time out here from our sponsor.
Now, we have had a great run in multifamily, going from 0 units to over 250 million in assets. That's over 2,000 apartment deals that we've been able to purchase through our framework, buy right, manage right, and finance right.
Now, Jake and I, we created the Jake and Gino community back in 2015. We launched our first book, BRRRR Profits. And since then, our students have closed over 60,000 units. That's over $4 billion in assets they've been able to close over the last 6 years.
And that's why this community has been so successful. We call it results-based education, and we pour back into the community everything that we've learned on our journey from 0 to 2,000 units and all our systems and scale that we use on our very own property management and investing companies.
Jake, I love that. It's not just education, it's implementation. So what I want you to do, click on that link down below, apply to work with our team, see how we can help you on your journey in multifamily.
All right, we are back. Now, is it just a t-shirt that someone was given to you, or is that a Daniel Defense shirt? What do we got going on here?
It's Daniel Defense. One of my buddies got me into the whole world of just like shooting some guns. So now I'm like I go shooting every weekend. There's just I don't know if you guys know like the USPSCA, like the practical shooting. We run around and shoot like pistols and like some ARs and stuff. So it's a lot of fun. It's my new hobby right now.
So you went into, you blew up the 401k. You took out all these credit lines and started buying guns. Is the family like okay with you at this point? Did you know, or like are they? You still have family members like Hawaii? This may be a controversial thing. Like, is it okay at home?
It is very controversial in Hawaii. It's a very very blue state, but and I mean like, and I've got some friends that love it, and some friends that again think I'm a little crazy on this. And
So what's the DD of choice here?
AR-15. So it's a
Yeah.
AR-15.
Yeah, the M4, you know, you can kind of I think they got like the safety on both sides. Forget the term for it, but they got some cool stuff. May have a couple myself. I don't know. We don't talk about that though. So
let me know after the show. We'll chat. We'll
Where did you start scaling? You said you started hiring some folks. You want to talk about the evolution of your business a little bit, because I think once folks get into it, there's definitely scale that needs to happen, and a lot of folks struggle there. So maybe unwrap that for people.
I think so. Like for me personally, it was just like it was really organic. Where like the lifeblood of a flipping or like a investing company is finding deals and finding money, right? Like you're always trying to find more deals. You're trying to find more money. So at a certain point, I was like a solopreneur, right? You're doing everything yourself. You're finding deals. You're funding it. You're managing the project. You're doing the refinances, the paperwork. You're kind of like a one man show. But then, as I like right after I quote unquote retired and went full time to real estate, I was like, hey, let's go after this really hard. So I just started to like buy a lot more deals, and then I had too many deals on my plate that I couldn't like manage all the time. So like let's hire like a virtual assistant to take over some administrative tasks, or the next step was let's hire a project manager to manage the project so I can continue to buy more deals and raise more money, etc. So it was kind of like an organic way of just like slowly, because I had too many deals, let's slowly adding people in so I can continue to move at the pace that I wanted to and not kill myself. So like I hire a project manager, then we hire like another admin, then we hire like a accounting person, like a lender relations, then like a social media person. After a while, social media got very popular. So it's kind of like slowly adding the pieces to the puzzle as you're kind of like slowly getting like more and more traction.
Love that.
You just said the smartest. We've been doing this podcast, I think, Gino, 8 years, something like that. I don't know, for very longer than I can remember. What you just said was the smartest thing I've ever heard on this show. And early on, it's all about finding deals and money. So many people that do not have success here get lost in the silly stuff where they're trying to set up an LLC. They're worried about what type of software they have. You nailed it. That is it. It's about action in the beginning. It's about finding the deals, getting your ass on site, and making sure you have the money to be able to close it, whether you're raising money, pillaging your 401k, whatever the case may be. That is the shortest route to success, and getting the first deal done will create future success. And that doesn't mean you buy a bad deal. The thing has to cash flow. It has to be stable. And you mentioned it before, getting into that first deal, the rest of the deals after that start to flow much quicker. So well said, man. I wish people could pull that through.
Yeah, like I think there's like you said, there's so many guys who get stuck in their heads where like they're like, I gotta set my 401k, I gotta set my LLC. But literally, it takes like 15 minutes at least for in Hawaii to like, if you're just doing single family, to like create an LLC, register with the IRS, and like create an operating agreement. And there's so many things I think sometimes where like they get so like muddled down with like the minutia, and they lose sight of like the bigger, more important picture. And I'm like been a victim of that myself, I think, in the past. But like when I first started, like my accounting was terrible. Like, like my business, like the bookkeeping was bad. There's like my administrative things were bad. But
these are all the signs of a good startup.
But yeah, but you're focusing on the things that are making money, generating money, and then you're kind of like creating chaos along the way. And then as you're creating more and more chaos and making money, now you bring in the people who will help you to organize it, kind of streamline your things, like get your bookkeeping more like in order, help you keep track of your escrows, etc. But like it's just like the money making tasks or like the income generating things are finding deals and finding money. Even to this
Daniel, was Jake doing the bookkeeping for you?
Well, is he an amazing bookkeeper?
He is like the best. He loves bookkeeping. He can't keep his hands off it, man. He was like, dude, I'm going to keep bookkeeping and editing podcasts. Amazing at editing podcasts. Let me tell you something. Those two skills, Jake is numero uno at those two skills.
officially the worst of all time, but I appreciate that, Gino. Daniel Kong, the most impactful guest we've ever had for the first time real estate investor. Ignorance is bliss. What if and over planning will kill the early entrepreneur? This is what I'm saying. That's the wrap for this stuff, guys. Daniel, any book recommendations or podcasts or anything that have added value to your life in the last year or so?
I mean, the big book was Rich Dad Poor Dad. I think that was the biggest thing that really changed my mindset. After that, I read Long Distance Real Estate Investing by David Green. That's how I started my out of state BRRRR process. Just following the out of state real estate investing book. That was like a big part of my early success.
Excellent.
Best way for folks to get a hold of you?
Instagram, you can find me at Daniel Kong 808. I actually have like a small YouTube channel, a small podcast of my own. Would love to have you guys on one day if you guys are down.
Yes.
Is that more about like AR-15s or real estate investing?
We touch on both depending on the guest. So like if we can swing it in whatever direction that makes the most fun. A lot of times it's this whole thing of like social media and just attention is like it's a different game I think than when I what I thought in the beginning. So it's just like you look at any sports like basketball or even the WNBA now with like Caitlin Clark, it's really about eyeballs and entertainment. And so what I'm finding as like being on social media and like even doing our podcast is in the beginning I prioritized like information like the how-tos of investing. I thought everybody would love this, but when you really break it down, it's the more entertaining the guest, the more controversial the topic, and the more kind of sound bites you can get from like your podcast. That's really where your like the goal is as far as like building an audience. And I think that's
does this mean your social media is filled with AR-15s and Playmates, or is it Lambos?
Like,
which is it?
That's one strategy. I mean, that's a Dan Bilzerian strategy, right? But I mean, like
it's worked pretty well. I mean, I think he's done okay with that.
I did buy a Lamborghini. There's like a little backstory to that, but part of that was for branding image, just because just to get more views, and so just like.
And which one did you go with?
The Huracan. So.
Kind of weak, Daniel. I don't know. You're buying Daniel the fence and you buy Huracan. Like I think you need some suicide doors, bro. Let's upgrade that. Come on now. Come on. You're disappointing me. No, I'm messing with you. That's fantastic. Gino, take us home.
So you have a young Daniel in 2018. He's sitting there in front of his computer, banging away, doing his software thing. And then all of a sudden he looks over and he's got this purple book next to him. He starts reading. He's like, holy crap, what the hell have I just read? Where have you been my whole life? So he says, I got to get into this real estate thing. I'm not sure. I'm going to try the stocks, but stocks are just slow. Stocks don't really make sense. I've got to be in front of my computer all the time to trade stocks. Let me try this real estate thing. But I got no money. Where do I start? And I'm in Hawaii. Everything's so damn expensive here. Well, I start reading David Green's book, Investing Out of State. And then I go to 5 banks on a sunny day, walking through the banks. Each one of them gives me a line of credit. I look at my 401k, there's more money there. And I'm like, I'm ready to go. I'm ready to become a real estate investor. I'm not going to tell my family yet. I start buying a deal. I go to Indianapolis. And I just say to myself, I wish I had started 5 years ago. But you know what? I'm happy where I am. I'm getting lucky. All of a sudden, getting a little momentum, starting to buy a couple deals. And all the naysayers that said this is not a smart idea, there's too much risk, all of a sudden they're coming around and knocking on my door and going, Daniel, what are you doing? How'd you do that? Can I invest with you? And now all of a sudden he's bringing it back in-house. He's looking in Hawaii. He's doing fixes and flips in Hawaii, making active income. And as Jake said, starting from 0 streams of income, now he's got multiple streams of income, multiple businesses in a short amount of time. This hasn't been the last 10 or 15 years. It's been 5 or 6 years. And oh, by the way, the market wasn't great when he started. COVID hit. He didn't use that as an excuse. He just understood that you got to take massive action. Reading the Purple Bible told him why. Getting and taking massive action and getting mentorship and continuing to progress showed him how. Thanks, Daniel.
Yeah, no, I appreciate it. I mean, like there's a lot of stories inside that little segment. I mean, COVID was a crazy time. There were some crazy stories during COVID that happened. I won't like to like that. We won't dive into it, but it's been an incredible journey. It just like the real estate investing that was a lot to do for me and my family. You know, I think like they talk about the story about Warren Buffett where him and his colleague, they both graduated from college. Saying just the other guy was just as smart, just as skilled. The other guy went to the oil industry, and then Warren Buffett went to become a multi-billionaire, right? And he said, like, I realized it wasn't just like how hard you row the boat, but what boat you're rowing. And for me, it was like exactly the same thing where like I worked just as hard as a software developer, but my ceiling was so low. Taking that same like work ethic and putting it into real estate, now like my life is like completely different and completely changed.
Love that.
Well said. Priorities, right? We're finding deals that cash flow. We're finding money to buy those deals, and we're not worrying about the cutesy stuff in the beginning. We're making it happen. So, gang, as always, we believe in buying deals for the long term. Think in decades. I'm Jake. He is the G Daddy, and we make it happen. We'll see you next time.
Thanks, guys.